Hello everyone, welcome to the WikiTrade. Today we'll go for our session 4 of our basic course of stock market, and in session 4 we will discuss about the fundamental analysis of a stock. Okay, so now here we are about to be clear about investment and trading. In trading, what is happened that why we do the trading, that we have to gain money in short term. Okay, so there is intraday trading or swing trading. That means um, we do the trading from 1 day to 30 days. When we go to the option part or future part, then we can see there is the we can do the trading for 1 month basis. And what is investment? It is for the long term purpose. Okay, from 6 month, 1 year, 5 year, we can do the investment for the long term purpose. And if you have a goal in life, for that purpose we do actually the main point, main aim of investing is that, for example, in 5 year you have to build a house. So in 5 year, you investment your money in a stock so that it can give you a remarkable profit, a handsome profit in 5 years, so that you can utilize the whole amount in building the house, or any day buying a car, anything. So, and these are the 10 parameters upon which we are going to discuss in fundamental analysis of a stock. So the fundamental analysis is the art of evaluating the intrinsic value of a stock to find the long term investing opportunities. Got it. So shareholding pattern, first one. So shareholding pattern is, we have already discussed that how a startup grows up to a company. So during this growing period, uh, it has taken the investment of many investors. Okay, so it may be any institution, it may be any persons, okay, rich persons. So the shares, total shares of a company is always constant, it is 100%. Okay, that is 100%. So this 100% share is now divided in between the co-founders and the investors. So who are there, the initial stage of the company? They may be the co-founders, angel investor, venture capitalist. Okay, and so they are called promoters. They are associated with the company from the very beginning, so they are called promoters. Okay, after the company grows up, the other institutions, foreign institutions or domestic institutions, or after coming to the stock market, the retail investors, they invest in that company. So all the shares, the 100% shares, are divided in between among this shareholding pattern, or among these shareholders, among these persons or institutions. So from this shareholding pattern, we can calculate that whether the stock is good or not. Okay, so mainly if we are going to a fundamental analysis of a stock, you can see that promoter this much percent, foreign institutions, retail, mutual funds, or the domestic institutions, this much percentage they are holding the um, shares of a company. So it is the general idea that if the promoter means who are the persons who who are been who have been there with the company from the very beginning stage of that company. So if the percentage of promoter is very large, okay, it is a big number, then you can say that, yeah, this company's fundamental value is good because they are the promoter. They own the company. If the company goes to loss, the means they have to bear tremendous loss. Okay, they are growing the company like a baby, so they will never want a company to be bankrupt. Okay, to goes down or to close. So if the percentage of promoters is good, then the company is good. Again, foreign institutions, mutual fund, and domestic institutions. Okay, so If they are investing in in a stock in a company, we are the retail trader. We may or may not see all the parameter of evaluation of a company. Okay, we may miss. There are 100 parameters to evaluating for evaluation of the fundamental analysis of a company. We may miss 90% of them, but these institutions will never miss. Okay, they are the means qualitative player. They are the player, and they have a very good knowledge, much more than the retail investor in a stock. Okay. um, so if they are investing, that means uh, this stock has a good value, a good fundamental value. That's why this type of institutions are investing in that stock. So by this also you can find the good or bad thing, or the fundamental analysis of a stock, and you can also see it. Okay, shareholding pattern. So this is called shareholding pattern, and you can check the shareholding pattern from quarter to quarter. If in March, for example, if in March quarter the foreign investors were 10%, and in June quarter the foreign investors increase it to 12%. So in 3 months, in a quarter, that the foreign institutions are increased by 2%. That means it is obviously a good share. Okay, something good is seen in that stock, so that foreign investors are now more attracted to that stock for investment purpose. Okay, so definitely we'll go for that stock. Then coming to it, financial chart of revenue, profit and net worth. So what is that? In quarterly basis, company publishes its revenue, profit, and net worth, and we have to analyze their growth quarter to quarter. So according to the SEBI guideline, a company, आज with a retail trader, with a retail investor, are investing our money in that company. So it is the duty of that company to show us their net worth, their profit, their revenue. Okay, they can't hide it from the investor because they are taking money from us. So in quarterly basis, company publishes their revenue, profit, and net worth, and we have to analyze their growth quarter to quarter. If a company's profit is growing from quarter to quarter, if revenue of a company is growing quarter to quarter, then it is very good. Okay, but similarly, if it is decreasing, then it is obviously not a good stock. If the net worth is decreasing, obviously the company is making loss. Okay, profit is decreasing, then the company is obviously making loss. So from this we can see we can analyze the fundamental of a analysis. We can do the fundamental analysis. Now the third one is our PE ratio. TTM means trailing 12 months. So it is the PE ratio, earning ratio, price to earning ratio on basis of 12 months. So it shows that a stock's current price and its earning per share over last 12 months or 1 year. Per share, how much, what should be the stock's current price? It is shows. So high PE ratio means the stock is earning high, and it may be overvalued. Okay, so when you go to the retail shop, okay, suppose a dress is cost MRP of a dress is showing that it is 2000 rupees, but we are evaluating that dress on the based of their pattern, color, and the quality of the dress, quality of the cloth. Okay, that means whether whatever we are paying, the dress is of its worth or not. Okay, whether it is a 2000 rupees dress, or no, it is a just 500 rupees dress, and the shopkeeper put the MRP 2000. So like that, it is also showing PE ratio, that in 12 months what should be the price. And if it is more than if it is high PE, then we can say it that it is overvalued. Similarly, if it is the low PE, then we can say it is undervalued. So typically PE ratio between 20 to 25 is actually good. Then our next one is PB ratio. PB ratio is price to book ratio. It is a simple comparison between the company's market value to its book value. Okay, so what is my book value? Um, Book value is to that if a company stops doing all business, pays off its loans and sell its assets, whatever it has, now company sells them all, then what will be the value of company? So if a company has the low PB ratio, then it is such again undervalued, and it is high value, then high PB ratio, then it is called overvalued. So PB ratio less than 3 is good for us. We can go for that stock. Then industry PE. Industry PE in market there are different sectors. Okay, metal sector, and we can also call it industry, metal industry, pharma industry, okay, vehicle industry, like this. So real estate industry. So the industry PE represents the average PE ratio of all the companies in a specific industry. Suppose in metal industry there are 10 companies. So in so average PE ratio of these 10 companies is known as the industry PE. And if the best PE industry is in between 20 to 25. Now coming to debt to equity. So debt to equity ratio depicts that how much debt has a company compared to its assets. Okay, company is taking money from many sources. Okay, from the investors, from the retail, from the institutions, also from the bank as a loan. Okay, if bank has to give the loan, you have to put some mortgage here. So that is the share. Instead, means on the basis of share, this company takes some loan from the bank. So it is called debt to equity. Per equity, how much debt a company bears. So a higher debt to equity ratio, it states that the company may have a very difficult time covering its liability because company has to clear that debt also, pay up that debt. So high debt to equity ratio is bad for a company. Now coming to our next ROE, that is return on equity. Return on equity, that means how much return is there of a company quarter to quarter per equity per share. So if it is more than 25%, then it is okay. Okay, it is desirable actually. And some cases ROE decline, but if that is due to some particular region, okay, pandemic comes here, so every company, 99% from except pharma company, ROE decline in all the sectors. Then it could be yeah, it's okay. We can take it as usual, but without any news, without any particular region, if it is less than 25, then it is a concern actually. Then coming to EPS, earning per share, and again this is based upon the um, 12 to 12 month. It is no 1 year. So how much earning is there per share? Okay, that means how much that what is the value of this earning of a share that is company offer to the public. Then coming to the book value. Book value, it is the value of a company's assets after netting out its liability. Okay. So if the total shares of a company, if we liquidated it, the total shares of company, what is the value company get? That is the book value. 100% share if it is liquidated in the market. The value is book value. Coming to the face value. Face value is the price at which a company stock can be bought. Okay, suppose face value of a company, a stock is 5. That means now the value of company should be the price of the company, the price of the stock should be 5. Yeah, it is being traded in 200 rupees. That's different, but actual value is 5. And if it is the face value, if the face value is 10 or 5, means more than one, then there is the possibility that in future that stock may split, and stock split we have already discussed about it. So now we are going to some example, and here I have taken it from the HL, and from HL it is the grow actually. I am not promoting any broker, but it is actually quite clear to make you understand that, understand the fundamental analysis. So here, first one you can see it is the market cap, 2,34,000 927 crore. So there are three types of companies are there: large cap company, mid cap company, and small cap company. So first small cap company, whose market cap is up to 2,000 crore rupees. Mid cap company from 2,000 crore rupees to 10,000 crore rupees, and large cap company, so it is above 10,000 crore companies. So HN is a, now it is the market cap is more than 10,000 crore sorry, more than 10,000 crore rupees. So that means more it is much more stronger fundamental, it has much more stronger fundamental value, because a lot of money is invested here. Okay, so it is a large cap company. It is the first criteria. Then PA ratio, that is TTM, is 27.02. Come to here. PA ratio is our price per earning in 12 months. So typically 20 to 25 is good. Okay, so it is 27.02. So we can take it as a good PE ratio. Then PB ratio, it is 7.53. Coming to PB ratio, so PB ratio is the price to book ratio. It is the comparison of a company's market value to its book value, and PB ratio less than 3 is good. But see, less than 3 is good, but it is 7.53. That means it is 7 times higher than its book value, and we can take it normalize this 7 also. Why? Because see the market cap, it is a large cap company, so for a large cap company 7.53 PB ratio is also good. Then coming to industry PE is 35.03. So industry PE, that means suppose it is the defense sector, HL. So in defense sector, suppose there are 10 stocks in defense sector, and the average PE ratio of that 10 companies is 35.03, and HL provides 27. So it is very good. If we compare to PE ratio of HL to the industry PE, then it is good. It is 35 and it is 27. Then debt to equity, that means per equity how much debt is there for HL, and it is 0. That means it is a debt free company. So it itself provides a very good fundamental mark to HL. Then ROE 27.30%. So ROE is calculated the, so ROE is return per equity. Okay, per equity how much return is there for company. So it is 25% is desirable, and it is 27.30. As HL is a large cap company, so yeah, 27% is good also. Then EPS, it is 130.03. What is EPS? EPS is earning per share. Per share, HL is being traded in 3,513 rupees. That means around a, okay, 3,500 rupees. So per 3,500 rupees, it is earning 130 rupees. Then dividend yield is 1%. We have already discussed what is dividend. If a company is gaining, okay, sometimes it also wants to share its profit in their investors, among their investors. So this company is also providing dividend. So in a long-term perspective, it is good. Okay, the company value is increasing day by day, and it is also providing you profit in the name of dividend. Then coming to the book value, it is 466. So what is book value? If a company's assets, it is the value of company asset after netting out the liabilities. Means if all the 100% shares if we liquidate in the market, all the 100% share, what is the value of this company? And the value of this company is 466. That means if 100% share is liquidated, the value of share HL share should be 466, but it is being over traded, that is 3,513 rupees. But considering to this large cap, we can means generalize it, but still now it is the value of this HL is 466. Okay, it is being traded like many times. Okay, 3,513, and if face value is 5, face value again. So actually, HL was previously face value of 10, then stock split happened, then it coming back to the it is then the face value is 5, and there is a chance, very good chance that in future it may again go for stock split. Till the face value 1, company may give you stock split. There is a chance. Sorry. Okay. Now going to our stockholding shareholding pattern, what we have discussed before. See, this is the promoters, means those who are there from the basic, from the initial stage of the HL. They have 71%. That means the HL stock is very good. Okay, promoters are there in large number. That means it is very good. Then foreign institution 12.26%. Retails are there. Retail means with the general investor or trader. Then mutual fund and other domestic institutions. Other domestic means some banks are also there. Some private firms are also there. They are also doing the investment. Okay. So this is the December 24, 2024 quarter. Then we'll go to our next. See, and here one thing you have to we have to see, you can verify them, you can compare them based upon September 24 to December 24. Promoter are there 71 in December 24. See what are the percentage of from taking the foreign institution, it is 12. See what is the foreign institution share in September 24. If it is suppose 10 and foreign institution is now 12, 2% increase, then it is growing actually. Okay, this is the easiest way to means see the fundamental analysis, verify the fundamental analysis. Now it is the overview. See revenue, profit, and net worth. So revenue quarter to quarter it is sorry, it is a net worth. Quarter to quarter it has been increasing. Profit quarter to quarter it has been increasing. Again revenue quarter to quarter it has been increasing. So from this value we can say that yeah, this stock is actually very good, and it is in the investable purpose. We can invest here. Okay, so this was our end of this session 4. Okay, and in next session we will go for our technical analysis. Bye bye.